Welcome to Markets Now. I'm Michelle Rook with Scott Varlick of Coima Varlick. Well, we ended kind of mixed over in the grains today with corn and soybeans lower, wheat higher, cattle futures to the plus side, mixed in the hogs. Let's start off talking about this corn market. First off, a little lower weekly close, a little lower today. Is this profit taking because we just can't seem to close above $5 in that nearby contract? Is the market starting to look tired?
Yeah, Michelle, thanks for having me. For me, yes, it does look a little bit tired, and that $5 number, March corn did act like it was trying to stay there, and I thought, okay, maybe it's actually going to do so, to only kind of get the rug jerked here, yeah, towards the end of the week and slip a little bit. So tired is definitely a word we can use. The funds have been long and riding it higher, and it's been a nice slow steady uptrend. That's what you want to see when you see a market rally, just kind of a grind higher, based off tight ending stocks and pretty good exports. So we've had that going for us, but we're in that middle zone, that middle ground where, okay, we're nearing the South American harvest. We're kind of done talking about weather with them. It's too early for us to talk about weather here, and we're not quite ready for some of these acreage reports in the end of March. So probably pretty easy for me to say the funds can relax a little bit here, take some of those longs off and see a little bit of a correction here.
And bull markets need to be fed. So the fact that crude oil was lower, the dollar was higher was part of it. But is the market also looking ahead at maybe more acres coming out of this USDA outlook forum?
Yeah, for sure. The crude oil down a little bit. That's probably what adds to some of this daily trade here, because you've got, stock markets really taking a pretty big hit today, and energy's kind of going with them. So that's one. And then, yes, as we look ahead, we're near the end of February. We need to start gearing up for some of these acreage numbers. And the financials look like you want to plant corn and not soybeans. And that's what we're hearing. Everybody's going to plant a lot of corn. So what that shift's going to be, we're not sure yet, but that is what I think we need to start looking ahead to. So every day we get closer to it, a little bit more pressure on corn. It's too early for us to trade some, drier conditions. Yes, I hear that we're entering it drier, but it's definitely not something I want to add into the market here in February. So we still have some large acres to soak up yet. So could easily see the market take a little bit more of a correction from here.
Soybeans, we look pretty range bound there in, 25, 30 cent range, or maybe even a little bit more than that. What gets us out of that range?
Yeah, not having a lot of fun trading soybeans on the long side or the short side. It has been a little bit choppy, and seeing a little bit of bear spread activity kicking in. Is that possibly because of some of the acres that the soybeans are not going to get this year? That could be why November is finally starting to hold. Would be one inclination, but needs that breakout kind of story. Maybe it's the acres. I think we can kind of start to look past the South America. I mean, we know there's going to be ups and downs down there and their weather, and there has been, but they're going to plant more acres every year. They've got their foot on the gas pedal. They're going to raise more soybeans. So they are the top dog there. So maybe our, weather stories and lower acres don't mean as much. They get a little bit clouded because of that, but still with the difference between where they're at and where the corn's at, that might be enough to at least get them towards the top side of the range and see if they can't sniff out the top side just a little bit.
Okay, so let's talk about the cattle market. Scott, we had a little bit of recovery here today, but we're going to have a lower weekly close. And so let's talk about this market. Are we holding where we need to from a technical standpoint for you to still feel comfortable that the funds are going to stay long in this market?
I wish comfortable was a word I could really use and stand on. It doesn't feel comfortable, I guess, here, just because we're at a market that is, coming off of record highs, and it's been on the slip for a month, and we got to try to figure out where it's going to hold. We're still holding some of these moving averages, some of these long-term uptrend lines. We had gotten so steep so fast when the cash started getting away and got to 212. We took a steeper route north. So it had some room to correct before we really start taking out some of these trend lines. So we can still call this a long-term uptrending market. We still do have that. So, and the funds have gotten out of some. I would have expected, if this was the big one, the one where we're really going to break, that open interest already would have shrunk a lot more than what it is now. So I think there's some defending that's still happening here yet. And I'm hopeful yet that we have some things to look forward to.
Cash market fell this week. How far? And do you think we're going to fall much farther?
And that's where my hope kind of comes in. We've had packers that have, really advertised kill cuts and followed through with it, where their, cash got away from them. It did. Their margins were squeezed, and it was an odd time of year for cash just to take off. January. I don't really remember a whole lot of January cash rallies that happened that fast. So them trying to get the cash back in check, trying to gain a little leverage back, but we're going to turn the calendar into March. So this week we see a little bit of $2, a little bit of 201, some 199 in the South. It was a little bit spotty. They weren't up and down the road, and there's some dark Friday, some dark Monday kind of plants. But we're going to get into March here pretty quick, and that's where I'm starting to feel good. Your seasonal cash high second, third week of March, because they're really starting to buy for some spring demand. And from my standpoint, we're still not overrun with supply. Still standing on the reason that we're at these high levels is because there's less numbers, and it wouldn't take much action from the packer to clean up maybe a couple weeks worth of cattle that maybe decided they weren't going to take these prices. So I think there's still going to be some good demand to look forward to, and I think the packers are going to want some cattle. So I'm looking forward to March. I'm ready to kind of get through this February month here, because I'm going to feel a lot better moving ahead.
But so far, even with the kill cuts by the packers, the box beef market has not been propped up. Is that a concern at this point?
For me, not so much yet. The time of year, I'm not so worried that the boxes aren't rallying so hard. We've been able to just lean back and say this demand on beef is great. It has been for years. We've always been able to rely on it. And I still think that's the case. Now here today, and this last week, I guess, we've got maybe the consumer is not in as good a shape as we think. So there's a little bit of nerves on that. That's why the stock market's been down hard for a couple of days. So that's your short-term little scare, saying, okay, what's going on? Are we still okay or not? But I'm still hopeful that grilling season is still going to be a very popular thing. Consumers have said we want high quality beef, and we're going to pay for it, even though we know it's a premium. They still want it. So even through some tough times, that's the demand that we saw. And I think that's what we're going to see going ahead. So I think when we turn into March and get into March and April, I think those boxes have plenty of room to go higher yet.
Well, Scott, we did get the cattle on feed report out on Friday, and we came in with the on feed number at 99.3, placements at 101.7, and the marketings number at 101.4. So a lot of these pretty much in line with expectations, right?
Nothing jumping off the page that says, hey, we didn't see that coming. So you can feel good about that, but you can dive into it just a little bit, on some of these numbers, because that placement number we're comparing to a year ago, the 1.79 million head placed last January, was very small. So that was dangerous to kind of have to compare back to that number. And 1.82, that 102% isn't so bad. I can definitely live with that. There was some chatter that could be 104, 105, just because we are comparing to such a small number. So at least that we can say, hey, I feel like we made it through okay, and I feel really good about it.
I don't know where the 104 and 105 numbers came at, because the border was closed for at least part of that month due to Mexican cattle imports not coming in on New World screw rooms. So that placement number would have been under, don't you think?
Yeah, we still see the lower numbers in the South. Texas's estimate was 85%. So definitely still, with that border being shut for the first, I guess most of the month. I mean, first half for sure. Should have slowed it down quite a bit. But once they got things open, I guess how fast are they coming in? Because they are going to get, their protocol together. There's a lot of money in this industry. So they were able to kind of get that righted and get some of these cattle here. So there was some people leaning that way. I guess I was not, but I just feel good about this. Maybe we'll have to worry more about the next one as we do see those southern cattle coming in. You're right.
So Scott, the breakdown does show a little bit of heifer retention though, right?
we are starting to note some of that. I think we ended the year with the, we had our cattle inventory report, which showed that smaller beef replacement number, which was really, a friendly number. But I think as we kind of started this year, we're starting to note some of this heifer retention. We've got, 97% heifers on feed and 101 on the steers. So more steers on feed, less heifers on feed, starting to see that shift happen. And maybe we've just put ourselves in a corner a little bit to where it's time to where we're forced to keep some of these heifers back because cow numbers, uh, the price for those cows has really gone up in the last 3 weeks, and there's been really good demand for them. So it's easy to not let your cow get old and find something younger because those prices for those old cows, it's a game changer when you're getting twice as much as you used to for some of those cows. It's pretty impressive, but we do just have to know there is some heifers getting kept back and maybe starting to see a little bit of a rebuild happening. And it could answer some of the questions for some of these. How are the feeder prices staying so high when the board's going lower? So there's just less of them to choose from. And that's what that does to the feeder market. It really puts a little boost under it.
Seeing a mixed close today in the hog market, nearby contracts under a little pressure. We saw some fund liquidation this week, but we had sharply lower cutout values. So do you see a lot more downside pressure yet in this market?
I think some of these cutout values are going to start to hold. We saw the bellies with such a significant break, and maybe they're acting like they're trying to bottom here, getting a little bit of recovery. So it's been rough on the front here today, and up a little bit in the backs, but trying to turn to the supply side a little bit and still seeing these feeder pig prices at $125 and still just I'm just kind of amazed that we're still holding at some of those high prices. So points back to disease and how many hogs we have. I feel like that's why these summers are usually ready to kind of hold when they get down near the dollar mark and maybe upper 90s, they find their way back. So I still think they're going to find their way back just yet and be able to crawl back out of this.
Thanks so much, Scott Varlick with Varlick. That is Markets Now.